Uncertainty is something we see at the markets very often, currently, of course, ahead of the US presidential election. Normally, this is a good time for gold, but what about now? Shall we check it? Yes, of course. Let's have a look at gold and silver and let's see what we can expect. Let's start with gold. Many people are thinking, gold needs to explode because we have so many reasons. We have uncertainty currently, so many open issues currently, the US presidential election, we have the conflict, US-China, for example, we have the corona situation, and we have all these central banks, the Fed, the ECB, the Bank of Japan, and all the other banks printing money and giving a lot of liquidity into the market. This is good for the markets and giving inflationary tendencies also for the gold price. So many people are saying, there's no chance, the market needs to go up. Yeah, but now we don't see any price levels going up. Yeah, there might be some reasons. Some people are thinking, of course, the ECB, for example, they said, we want to wait a little bit before we print new money and we want to wait a little bit about the corona situation, how everything works out. Yeah, understandable, no problems at all. But the market currently takes a breather as well. So what we have here is a strong market to the upside. Yeah, we can say this is really impressive. And if you take the whole thing, it was really a long move to the upside. And currently we are in a very shaky way to the downside, whatever it means. This is a little bit too low, but this is indicating, this is not the strong move we are in currently. Compare this move or even the long one compared with this one, you would say, no. The up move is the strong one. And this is a really typical pattern, no matter what you're seeing in the charts. If you see something like this, if you see a strong move into one direction and a corrective pattern into the other direction, you will have a good chance that this is a breather. This is not giving a new direction. It is, but only temporary. It's not like, it will fall forever. No, it's not. It's only indicating, give us a break. Let us wait a little bit and then we will continue. Some people were asking me, is this a good low already? And we were talking about this in some platforms already and saw this part here. And if you see this in a lower time frame, for example, in the 4-hourly chart, what do you think? Is it an up market or a down market? Currently, it's an up market. This is the lowest point, and if you see this one, it's an up move, definitely. So no problem at all. But is this convincing? Can you compare this with something like this? No, definitely not. This is not looking convincing for me to buy the market. No, definitely not. Especially when we have some strong moves to the downside before and something like this here. And also here, strong to the downside, weak to the upside. Strong to the downside, weak to the upside. And even here, if you go on a lower time frame, this low here is the same like this one here. And if you compare this one, we have a lot of overlapping here. The overlapping part is if you see some counter moves, it's an uptrend. The counter moves are this one. And you can see this low is below that high. And this low is below that high. So this is not moving forward strongly. This is always coming back into the old price area, which is a clear indication for no, we don't want to buy. Let's wait a little bit longer. We are not believing what we see. So this is a very typical corrective pattern behavior. So strong move to the downside, corrective pattern to the upside is indicating, hey, the down move is still not over. We are still in a bearish market. So even if you're convinced that the gold price will rise, subsequently, I think there's a good chance for. So I would probably think that the market at the end will continue to the upside and give us new all-time highs here, of course. But you can guess from my drawing here that I would expect that we are not over with the bear market here, that we will see a drop below this level, which is roughly, let me guess, it's from the lows in the end of September. It's 1,845 roughly, or 50, something like this, that we will go below this level, which is really typical. And the good news would be if we are going below this one, it's not sure that the market will only drop a little bit or a little bit even further. But after that, we have a new low. And the previous low was this one. And then we have a level where we can enter the market on the long side, at least to continue to new highs, all-time highs in this case, or even way more. There's maybe a lot of more to come, but this is we don't know this exactly now, but we have good chances that this will happen. The same thing as always in the market. If you have a strong move into one direction, if you have some corrective pattern into the other, you should expect when leaving the corrective pattern, we will continue into the strong direction. And leaving, there are several things what you can think of. What I'm doing is I'm taking the last intermediate high as a trigger, for example. If I'm not satisfied with this, because this is too far away, I want to enter the market here, I switch to a lower time frame. But what we should expect at this point here is something the same like we have here. So I check this on a lower time frame and also see here some strong move to the upside and ABC to the downside and enter at that point. And that's exactly what we want to do. So currently, buying the market is not the best opportunity, I think. We have the better chances that the market will continue to the downside for a while, going below these levels here. How far? That's not given yet. We can try to estimate this with, for example, Fibonacci's. At least here the last move was starting here at that point. But I definitely love Fibonacci levels. But don't get me wrong, these levels are not real turning points. There's a line, we need to turn. No, it's not a support which is unbreakable. It definitely is breakable. But on the other side, if you have several of them, the chances are a bit higher. So what we do is something like clustering. We check for clusters. Are there some levels where many of these levels are at the same level? Here, for example, you can see at roughly 1,770, we have two really close together. This is a quite lonely level here, but we have another cluster roughly around this level, three of them, not really tight, but we can see there's an area, let's say 1830, roughly around, plus minus, let's say 10 points, where another support level is. So when the market is reaching these cluster levels, we have a better chance that the market will turn there and hold there. So I would not, I think we will do another video before the market will reach there, so we can think about the exact level when we have more information when the market is going down. So I would estimate that the market to the downside is really limited. It can be further down to this level as well and even more, but this is not very high probable. I think the best chances are somewhere around this level, 1,830 roughly, or next level would be roughly 1,760 or 70 around these levels. But this is just an educated guess. This is not a promise that the market will do so, but still going to the downside is the best what you can think of. After that, I would expect that the market will turn and continue to the upside, but before that, let's check what the market is giving us. Let's have a look at the silver market and compare what we have there. We have a really, really, really nice situation. This was a long-term low, and we had a strong move to the upside. So we have something like a proof. This is an impulsive move, and we have something like a corrective pattern here on this side. We have not so many opportunities for this pattern. There are normally something like this, a first move to the upside and a corrective to the downside. So in this case, we would be roughly around here, expecting that the market soon, not necessarily now, but soon will turn and give us a bull market. Or we have this shape, a strong move to the upside. This was the low. Currently, we are somewhere here in this area. Maybe it needs a little bit more time, a little bit lower levels, but after this, we can run to a really, really good bull market in both cases. So even in this case, with only being a zigzag, which is not my preferred picture, but even in this case, we could expect that the market will easily reach some really high levels. You can estimate, even in this case, depending on where the low is, let's estimate it's roughly here, we could expect the market will nearly reach the $40 level in this case. So I think we have a good chance for a bull market, not necessarily now, but maybe soon. That's a really typical one. This is especially because if you check the pattern here, the strong move to the upside, we have a setback really nicely in the typical trend channel. The size of the setback is also enough. We are below the 38.2 level, which is indicating that as well. But what we've seen here is not really convincing. It looks a little bit similar to what we've seen in the gold chart before. But let's have a closer look at that, because there is still at least a chance for that the market is going up. I know many people are saying, too many chances, no real conclusion, no real evidence that this will happen or that. Yeah, we are traders. We are not reading the crystal ball. But with all these, this might happen and this can happen, we have clear ideas where we can enter the market and when we have to leave the market. For example, one example is to see this move here as the first move to the upside. It is a little bit shaky, indeed. This can be something like a leading diagonal, which is looking like a corrective pattern, but it is indeed it's the first wave going into the new direction, which is looking roughly like this. You can see it can have some overlapping. You can see it here. This is the 4 is below the first wave. So this is something like an overlapping pattern. But these patterns are possibly at the very beginning of a long bull market. And even in a zigzag, we can have these leadings here, or 7% probability, or 40% in an impulse move. So yes, it is possible that we are already in this situation to see something like this. I don't want to overstress this situation, but it is a possible outcome with an ABC to the downside. But definitely this picture is done when the market is going below these lows here. When the market is going below the September lows here, then definitely this picture is not valid anymore. So if you are long already somewhere here, the latest way to stop this is at this point here. When reaching this level, we should expect that the market will go, let's say, to the 50% level or even to the lower end of the trend channeling. So there's no use to keep the position. Yeah, maybe the market later will turn. Yeah, it might be, but then open a new position and don't waste time keeping money into a market which might even drop, even if the chances are not very high, but there's a danger of doing that. But you can definitely know if the market is going through this level, this idea is not valid anymore. If you want to buy the market, the first level to enter the buy side would be this level, which is the high from October 21st, which is roughly $25.35 at that level, because this would definitely end this corrective pattern and gives us a very good indication, okay, we might be on this way already. And never forget, the probabilities of being on the right side currently are quite low, but the risk-reward ratio is very high, because if you enter a market roughly around this level and stopping below that point, this is your risk. Your expected profit is this. You can see risk-reward ratio is very good. So even if you have only a hit rate, a positive rate here, a probability of reaching the target of, let's say, 50%, no, 30%, even 30% will give you a positive result because of the good risk-reward ratio here. So bringing all together, the gold market and the silver market is not indicating a strong buying opportunity currently. There's a chance that the market already is on his way, but I think chances are higher that the market needs a little bit lower levels before boosting to the next bull market. I would not buy at these levels currently. I would wait for the market going down or overshoot these intermediate levels I've mentioned before. So this is giving me a proof, okay, they changed their mind anyway. Especially this week is a little bit tough, so I hope that next week's analysis might be a little bit clearer because we have one big issue of the table. We will see. I hope the market will be exciting anyway, so no matter what is coming out, I think for us traders we can enjoy anyway, and we can have all the benefits out of the high volatility currently in the markets, and we can use this. I hope you have your fun with all these and you can learn or take something out of these videos. If so, please don't forget to subscribe and please hit the like button. I would really appreciate this, and give me some opportunity to bring new content and more content step by step. And leave some comments if you want to stress something. I would be happy to read this.